How do you have a recession when the government is like 30% of GDP? It's almost mathematically impossible, which it is right now.
Welcome to Bankless, where today we explore how notable crypto trader Arthur Hayes is positioning his crypto portfolio at the end of this 2024 going into 2025. This is Ryan Sean Adams. I'm here with David Hoffman, and we're here to help you become more bankless. All right, first we got to get this out of the way. We've recorded this on election day. So literally the day America is showing up to vote at the polls. We don't know who won the election at the time of recording. Neither does Arthur. He's like literally getting ready to go to bed. He's in a different time zone.
But I think the good thing is Arthur just doesn't care.
Yeah,
it's not actually relevant. He says the election's irrelevant. So It actually kind of fits.
It doesn't matter according to him. We talk about that in the first part of it. But to him, the outcome is really the same no matter what. In addition to the election, we also talk about the Chinese property bubble and the coming money cannon, which Arthur thinks will be bigger than the COVID stimulus. We also talk about the Fed's next move and why Treasury is sucking all the oxygen out of the room. He has some choice words and labels for Jerome Powell.
Arthur has a lot of choice words, so some viewer discretion might be advised. Don't listen to this one with kids in the car.
There you go. Yeah, thanks, David. We should shout that out. He also tells us his positioning for the prospect of recession and war, and then we get into his crypto portfolio, what he's holding and why. One of my favorite parts of the episode is about why he's bullish ETH, but not for the same reasons that David and I are bullish ETH. So we get into some debate on the topic of whether ETH is money, whether it can be money. And I want to thank David. We got a little bit of concession from him, but like not much.
We identified the gap between us and Arthur, which I think is a very overcomable gap. We just need time. Having Arthur on the show is always useful just to kind of get a download on a pretty zoomed out perspective for somebody who zooms out very, very far into the ultra macro, but then also like plays in like degen meme coin trenches. He's a guy that can trade it all. So let's go ahead and get right into that conversation with Arthur Hayes. But first, a message to talk about some of these fantastic sponsors that make this show possible, especially KRAKEN, our preferred exchange for buying crypto assets in 2024. If you do not have an account with KRAKEN, consider clicking the link in the show notes to getting started with KRAKEN today. If you want a crypto trading experience backed by world-class security and award-winning support teams, then head over to KRAKEN, one of the longest-standing and most secure crypto platforms in the world. KRAKEN is on a journey to build a more accessible, inclusive, and fair financial system, making it simple and secure for everyone, everywhere, to trade crypto. KRAKEN's intuitive trading tools are designed to grow with you, empowering you to make your first or your 100th trade in just a few clicks. And there's an award-winning client support team available 24/7 to help you along the way, along with a whole range of educational guides, articles, and videos. With products and features like KRAKEN Pro and KRAKEN NFT Marketplace and a seamless app to bring it all together, it's really the perfect place to get your complete crypto experience. So check out the simple, secure, and powerful way for everyone to trade crypto, whether you're a complete beginner or a seasoned pro. Go to kraken.com/bankless to see what crypto can be. Not investment advice. Crypto trading involves risk of loss. The UNISWAP wallet is officially the preferred wallet of Bankless, and it's the one we use anytime when we want to transact on-chain. Whether you're on your browser or on the go, UNISWAP wallet makes it easier than ever to swap anytime, anywhere. Use your wallet to transfer funds directly from a top centralized exchange and tap in thousands of tokens across Ethereum and over 10 other chains like Base, Arbitrum, and Optimism. UNISWAP wallet delivers deep liquidity, fast execution, and reliable quotes with zero gas swaps through Uniswap X. And when it comes to security, you can rest easy knowing it's backed by Uniswap Labs, one of the most trusted teams in DeFi. Their code is open source and independently reviewed, so you know it's protected. So why wait? Download the Uniswap wallet today on Chrome, iOS, and Android. And don't forget to claim your free uni.eth username directly in the mobile wallet. Start swapping smarter with Uniswap. The ARBITRUM portal is your one-stop hub to entering the Ethereum ecosystem. With over 800 apps, ARBITRUM offers something for everyone. Dive into the epicenter of DeFi, where advanced trading, lending, and staking platforms are redefining how we interact with money. Explore ARBITRUM's rapidly growing gaming hub, from immersed role-playing games, fast-paced fantasy MMOs, to casual luck battle mobile games. Move assets effortlessly between chains and access the ecosystem with ease via ARBITRUM's expansive network of bridges and on-ramps. Step into ARBITRUM's flourishing NFT and creator space, where artists, collectors, and social converge, and support your favorite streamers all on-chain. Find new and trending apps and learn how to earn rewards across the ARBITRUM ecosystem with limited time campaigns from your favorite projects. Empower your future with ARBITRUM. Visit portal.arbitrum.io to find out what's next on your Web3 journey.
Bankless Nation, very excited to introduce you once again to Arthur Hayes. He is a trader. He is a macro commentator. He is the co-founder of BitMEX, also the CIO of the Maelstrom Fund. We want to talk about how he's positioned. This is the end of 2024. We're going into 2025. A lot of things happening in the world. Arthur, welcome back to Bankless.
How you doing, guys?
Good, man. Okay, so it's an election day over here in the U.S. where David and I are located, so everyone's going crazy. You know, a lot of, I was dropping my kids off to school, big, Trump flags, somebody on the side of the road waving flags. Like, it's a little crazy over here. What's your plan? I know, I don't think you're located in the U.S. right now, but like, what are you doing today? What are you watching? What are you paying attention to?
I'm doing nothing. I'm about to, after I get done with this, I'll be going to bed, and I'll wake up tomorrow morning and I'll play tennis. And at some point, I'll check my Bloomberg and see if either Harris or Trump conceded. And if not, then you strap yourself in for weeks or months of a contentious battle of, who won, right? I mean, similar to what happened in 2000 with Bush and Gore, when people were debating about hanging chads and all sorts of other bullshit because even, paper ballots and I don't know, it's just nonsense, right?
Like, do you think any of this really matters? Let's talk about for investors or for crypto. Do you think it matters who wins?
No, I don't think it matters at all. I think the regulatory apparatus will be what it is. I honestly think it's kind of irrelevant. The reason why Bitcoin is $1.3 trillion asset class is not because of regulations, either pro or against. The reason why the Ethereum decentralized computer is the second largest cryptocurrency has nothing to do with regulations. The reason why there's all these other meme coins and all these things happening has nothing to do about, this or that politician and what their stance on crypto is. It's a fundamental, better technology of communicating what value is amongst humanity, and then money printing, right? And so, we don't really talk that much about the technology because it's not really that relevant for most people. It's all about, okay, well, I can see that my paycheck buys me less every day, every year. I can see that the rich get richer and the poor get poorer. I can see that nothing has changed, but, oh, look at this new thing called crypto, and look at all these individuals who've achieved generational wealth in a very short period of time because there's this new technology, there's a new way of networking and communicating, which has allowed a certain portion of humanity to escape the inflation and debasement and, financial repression and all that sort of stuff. And so I don't see any of that changing in the United States and China and Japan, European Union, any countries, right? Everyone's doing the same stuff. Everybody has a fractional fiat banking system. Everyone has expended a lot of credit to build stuff. And a lot of that stuff at this point isn't worth the money that was put in, but no one's willing to recognize the loss and impoverish some rich people. So they're just going to inflate it away and hope that poor people don't revolt. And so that's where we are. And so Donald Trump, Kamala Harris, two sides of the same coin. It doesn't really matter who wins. It's fun theater. I'm sure all the networks in America love all the campaign finance dollars that are going to buy ads and whatnot. And Zuckerberg and Sergey Brin and all the social media bros, they love the billions of dollars that are getting spent by each campaign to try to sway opinion. And maybe there's outside countries trying to influence opinion as well. So everybody's just spending money on media. It doesn't matter.
Does that mean that you're not positioned in any particular way as it relates to the election?
I was long before. I didn't reduce my exposure.
Yeah. You have not changed your position.
Cash on the sidelines that I'm not deploying yet because I think it's going to be a bit, there's some questions about how the Fed and Treasury react depending on who wins, and how that sort of plays out. But, let's say by the end of January, all that'll be solved, I think. And it'll be very clear, the path that they're going to go on, and then, get on the horse.
That's so funny because I think a lot of people in crypto agree with you in large strokes, but like they do still tend to think that politicians have the ability to at least slow things down. So they might say, yeah, broad strokes, Arthur, you're right. Nothing stops this train. The money printer goes burr and crypto is going to like ascend, and it's just like a better communication network. And that's true. And like, if you measure that in decades, but like there's Gary Genslers of the world, for instance, who could just like throw a monkey wrench in like, Western finance clarity around like crypto and just like slow it down, put the brakes on. Do you think that that's the case, at least in the short run? Like some of these politicians and the administration choices might have some impact. Like, I mean, Trump has come out and said he's very pro crypto. I mean, you would think that would be bullish if he won the election on the crypto side, then, and like more bullish maybe than Kamala Harris. Do you see that there's like at least a short term play here?
Even if, let's say that the regulators actually mattered, which I don't think they do in a macro sense to the long-term direction of crypto, the specific ways in which America is governed means that even though President Trump or Harris can say pro-crypto things or anti-crypto things, they don't write bills. So bills are written by Congress people and senators. And in the wake of what is it, the Chevron case, where the Supreme Court basically said Congress makes laws, not the unelected bureaucrats, it's the onus is even more so on the rulemaking body to create a rule, whatever it is, good or bad, and to put that bill on the president's desk for him or her to sign it, right? And so if we're talking about the most polarized electorate in modern history, probably the last 100 years, how the fuck are these guys going to create a bill that's going to get on their desk, regardless of what either candidate says for or against? So there's absolutely no chance that there's going to be any sort of bipartisan thing that they can agree on of what crypto regulation should be. And so even if you believe Trump, and even if you believe that if there's one person in charge of whatever regulatory agency, they can somehow wave the magic wand and all of a sudden all these institutional investors are going to go and they're going to market YOLO Bitcoin, and you're going to, it's all going to be, it's going to be from like 70,000 to $1 million. That's just not how it works. And so on a micro legislative level. And so I think people just don't understand, well, the Americans didn't, pay attention to civics class, and then everyone else who's not American, understandable why you wouldn't understand this.
Is there anything about the election that you're paying attention to? Because there's more than just the president, right? We have the presidential election, we have the Senate, we have the House. Is there anything about the election that is signaled to you?
I just want to see the outcome, right? What's the makeup? And then that determines like who gets the money. So which particular part of the American economy or electorate gets the free money, how quickly that happens, right? And so if it's one party controls all three branches of government, then the money gets printed faster. But if it's a divided situation, then you need a financial crisis or some sort of war that says, oh, okay, now we're all together in the printing of the money. And so we'll put aside our differences and we'll do the same thing we would have done if we were in charge. And so it's just the pace of what happens.
So it's really, it all comes back to the money printer. That's the biggest signal to you.
That's it.
Let's
do the math. If you look, I've done the math. I looked at the recent presentation to the Treasury Borrowing Advisory Committee by the Treasury. It was released late last week. And they have a nice chart, and it shows the largest 5 expenditures of the federal government, which are healthcare and Social Security, defense and veterans benefits, and interest on the debt. And so all 5 of those combined grow faster than nominal GDP. So your spending is growing faster than your ability to tax to fund it. There's just mathematically no other way but printing money. And so I don't care who's just put in office. Both Trump and Harris are going to bomb somebody. They might not bomb the one that the other one's going to bomb, but they're bombing somebody. So defense is going up, and nobody cuts benefits for old people because they vote. And so if you want to be the congressperson that cut the benefits of the boomers and the silent generation, then you won't be in office in 2 years. And so it's a very simple calculation that spending can only go in one direction because it's in a politician's interest to continue to spend.
Okay, we're going to come back to that. I want to come back to that in the context of what China's doing too. You've written articles about this, and we'll pivot back to the Fed too. But it's like the high level for Arthur Hayes, it seems like, is just like they're going to print money. It's just how fast, right? And who's going to print it doesn't matter. It's just how fast. Okay, but like before we get there, let's talk about the cycle that we're in, because a lot of people in crypto are a little bit confused. Like even David and I have been talking like, wait, is this a bull run? I mean, it kind of feels like it because Bitcoin's close to all-time highs. And yet institutional demand driven, it doesn't feel like there's a new crop of crypto investors. So are we really in a bull run? Are we what's your sense of the crypto market cycle right now? Is this bear, bull? Is this something else? Do you even think about it like that?
We had a very good bull run from, call it late 2022 up until early 2024, so in the April time period. And if you want to be a very good student of money markets, you can take a look at the reverse repo facility at the Fed. And September 2022 was when it hit the high of 2.5 trillion, and it was drained down to what I don't know, is now like 200 billion over the next 18, 24 months. And that corresponds perfectly to the rise in crypto. So there was a bull market. Janet Yellen said, fuck you, Jay Powell, we're fucking printing money. And she did it, pumped in $2.5 trillion into the economy. Every asset went nuts, right? We're at S&P's at all-time high, NASDAQ's at all-time highs. Crypto is at all-time highs in certain asset classes. So there has been a bull market. It hasn't been as broad based as traditional ones, where every single piece of shit altcoin is 10x, right? And I was like, what the fuck? I thought I just had to buy Bitcoin, and the next week I sell my Bitcoin, and then I buy the worst shitcoin that I could find on crypto Twitter. That goes up 10x, and I sell that for a bit, then I go back into Bitcoin, and then I just rinse and repeat. But it didn't happen like that this time. But in a macro sense, there has been a bull market. It's just that very few people have participated in it. And so you have a lot of people who said, oh, it worked like this in the past cycles, therefore it must work like this in this cycle. And they got hosed.
Sorry, David, you looked like you had something to say there.
No, I was contemplating.
All the dog shit in your portfolio?
Yeah, David, it's
exactly
like
right.
You're thinking about his life choices.
Yeah.
My God, man. All right, so what's your base case here, Arthur? Then 4-year cycle, either the way others played out?
I know someone else asked me this, like, oh, it's going to be the 4-year cycle. Like,
yeah.
Why try to be prescriptive? Just adapt to what is. I think if you try to put these prescriptive, oh, it's a 4-year cycle, therefore in the second or third year, whatever it is, I must do this. Well, okay, if everyone does that, then you don't get the result of the past. So I don't know how many years this cycle is.
It doesn't even matter.
It doesn't matter.
Yeah.
Look at the liquidity cycle. Bitcoin, I think, for the first time, is very clearly directly related to liquidity. And China was in the past, it was the dollar this time. I mean, it goes back to China and then maybe the global aggregate. But the tech is solid. The tech changes less and less, obviously, as Bitcoin gets older and older. And the thing that really matters is how much fiat is being debased. How fast, from where, what's the pipe? Understand that. And I think you get a much better sense of where Bitcoin and crypto goes. Is it a 4-year cycle? I don't know. Could be 4, could be 5, could be 6, could be 10. I don't know. Doesn't matter.
All right. Well, let's come back to your crypto portfolio a little bit later and see how kind of you're positioning for this. Because I think a lot of people are still wondering if we're going to have this play out, like we're going to get the altcoin kind of trade going on. But we'll get to that later. Let's talk about liquidity, because you think that's key to understanding all this. All right. So a lot of crypto investors don't understand China. I mean, I think a lot of us barely understand macro and the Fed. You seem to have a take on China, which is basically, this is a quote from your article, your recent article on the 28th. Given that the Chinese property bubble was the largest in human history, that's what you said, the largest in human history, the amount of one credit created will rival the sum of dollars printed in the US in response to COVID 2020, 2021. Wow. So you're talking about a Chinese property bubble, and you're talking about a big money cannon injection of fiat liquidity into these markets as a result. Give us the context here. So how did we get here? What is what you call monetary chemotherapy, and why is China heading in that direction? But why is there a property bubble in the first place?
Well, at the end of the day, the Chinese government said we want to industrialize very quickly. And they said, okay, well, industrialization happens in cities. They were a very agrarian economy coming into 1950 after the disastrous civil war between Chiang Kai-shek and Mao Zedong. And so the Communist Party said, we're going to urbanize. And so every 5-year plan, there's an urbanization target. Now Mao fucked things up pretty bad while he was in power until 1976. And then things started to liberalize under Deng Xiaoping, who was basically I'll do whatever it takes just to create prosperity in China. And if that goes against sort of Maoism or traditional Marxist-Lenin theory, whatever, let's just grow. And so let's get these people into the cities. And so again, all credit is determined by state preferences, because the largest banks are owned by the state. The largest companies in any sector are all state-owned. And so if the government says we want to have people in cities, then what do? We build stuff. And so if you're going to move, I don't know how many hundreds of people have moved from farms into the city in about 30 years, right? That's just going to create a epic boom in land prices, which I think the figure that I have was they're up like 80x over the past 20 years. It's going to create an epic boom in all the other manufacturing and industrial goods you have to use to build apartments, cement, air conditioners, cheap furniture, right? All this stuff. All these companies did very, very well from the late 80s until sort of the 2020. And so the problem was that at a certain point, you reach saturation in how much property you need for a particular amount of people. And they reached that saturation. And then they said, well, government policy says we need to build housing. The only thing that banks are going to lend for is not the only thing, but one of the main things is property. Therefore, I shall buy property. I shall build property. And if I'm a Chinese, investor, I can't invest abroad. The currency is restricted. Of course, the super wealthy are able to get their money out, but the average Chinese saver doesn't have access to foreign investments. And so, when you're getting 2 to 3% in your bank account and the economy is growing at 10% a year, you're like, well, fuck, that's not going to cut it. I need something else. Property was the only thing that they really could invest in that had a track record of always going up, was supported by the government, was supported by the banks and the credit. And so everybody believed property can only go up. And it was true for the past 30 years. The best thing you could do was save your money, borrow money, buy a property. And so that's what happened. And Xi Jinping gets into power, and he's not the first one to recognize this, but he said, well, we're misallocating credit, right? If we want China to be this manufacturing, country, we want people to have a harmonious society. If we have the most expensive real estate in the world, when you think about it per median income, I had a chart in my essays like Beijing, Shanghai, Shenzhen, like the rental yield is the lowest in the world, meaning the prices are super high. And if you look at the price to median income, apartments in the major tier 1 Chinese cities are the most expensive in the world. And so obviously that creates a lot of social angst, right? The old own all the shit, and then the young are like, what the fuck? I can't get on the ladder.
I know this movie.
And I'm not going to have any kids. I'm not going to have a family. And so you get sort of birth rate decline, which, in a country that needs young workers to manufacture things, that's also bad. So she says, okay, well, we're misallocating credit. I need to stop it. Now, it's hard to stop it when literally every arm of the government is made money on this. All the major banks have loans against this. All the major industries, the majority of their business is property. And the number one asset held by everybody in China is property. How do you pop that bubble without causing massive social unrest? And so I guess by 2020, after the COVID lockdowns and whatnot, he thought he had enough control politically and economically to pop the bubble. And so they started doing what every country does when they pop a real estate bubble. Same with the Fed did in 2007 and 8. They start raising the price of credit or restricting developers from getting it. And predictably, the market collapsed. And so we're 2 or 3 years into this situation, and deflation is sitting hold in China. The median sort of time that it takes to clear a property bubble is, 5 to 10 years. You think about the United States, Japan, it took them 20 to 30 years to get out of it. And so that's what she's staring down the bubble, like, okay, what the fuck? What am I going to do to get out of this situation? And at the same time, the geopolitical situation's heating up. There's proxy wars everywhere between China and the US. There's a trade war and all these things, right? And he's trying to right-size the economy in this property bubble. So there's two options. One is you do the Argentinian situation where you do liquidation of credit. Okay, you bought a property, you lent against this thing and went down in price. Sorry, that's called capitalism. You lost money. And so you're going to go out of business. You're going to go bankrupt. You're going to fire some workers. That's the one option. That gets rid of all the debt very quick, extremely painful, could cause a revolution. You never know. Or you do monetary chemotherapy, which is you lower the price, quantitative easing, lower the price of credit to zero, make the banks solvent again in fiat money terms, and then do bank-directed credit to get the economy back going, which is what Japan has done, what the European has done, and what the United States has done after their respective property bubbles. And I call it chemotherapy because, yes, while it does cure the economy, the financial sector makes them whole, the banks are whole, they can lend again, you destroy the lower middle classes with inflation because you have to financially repress them to make sure the capital doesn't leave. And given the amount of money that China printed to create this property bubble over the last 30 years. They've just, the amount of credit issued in China is enormous. The amount of chemotherapy they're going to have to put on their economy is just going to be next level. And so I know a lot of people think, oh, it's not enough. There's a lot of commentators, economists like, oh, China's not doing enough stimulus. Well, everyone said the same thing about the Fed in 2008. What TARP wasn't enough. We need more. By March of 2009, you were doing quantitative easing 1. S&P didn't bottom until March 2009. And then over the next, 12 years, massive bull market, and they kept printing trillions and trillions and trillions of dollars. The European Union wasn't doing enough in 2011. The euro's going to crack. Mario Draghi gives a speech. Well, I'll do whatever it takes. He's done whatever it takes. They've been printing money since 2011. Abenomics started in the early 2000s. Kuruda-san came in and said, I'm going to print the most money ever. Yield curve control, quantitative easing. And again, it wasn't enough at the start, but once you do it for 20 fucking years, it's enough. And so it's just wait. Now, you don't have to say, they don't have to come out with the full bazooka on day one. It takes a while. And so I think there's a structural bid under sort of, fixed supply assets like Bitcoin and gold that are going to go up because there's just so much Chinese fiat entering the system to reflate their system.
Yeah, what's crazy here is because we've seen this movie play out in the West, like almost like to a T. All right, it's like you were mentioning 2007, 2008, and you actually mentioned earlier in your essay that there's like an underlying reason. I hadn't included into this, but I found this really interesting. There's an underlying reason that governments want citizens to own property, and it's actually, partially, you say, for regime stability, because when citizens, a larger percentage of citizens own property, they have a shelter, they have a place over their head, and they have something that they need government protection for. Whereas, like, you think about the basal use case of government is to like secure your property, right? To make sure that somebody with more guns can't just like come and take your home and your property away from you. So governments sort of want citizens to own property so that they will prop up regimes because they need that security overshadowing it. So this is just a function of governments, and this is why we see property bubbles basically in any sophisticated, complicated economy. Is that right?
That's my idea on the theory of like why government needs a wide dispersed ownership of property in the place of like, organized religion or some other, cohesive rule of why you should respect the authority of the state.
So Arthur, I do want to kind of compare and contrast the 08-07 United States housing crisis to the one that you're alluding to in China. The difference that I'm kind of getting is that there's like a little bit more of a controlled demolition rather than like an uncontrolled explosion that I think happened in 2007, because we had seemingly had no control over it in the United States. It was a complete surprise.
Well, the Fed raised rates starting in 2000 and what, I don't know, 2006 or 2007. I mean, the first canary to fall were the two, what was it? BNP, Paribas, credit hedge funds. They gated each other. They gated investments in the summer of 2007. Bear Stearns went bust within 7 months. It was bought, and JP Morgan had the forced shotgun marriage. The Fed was raising rates. They stopped at that point, but it's always caused by a restriction of credit because the authorities are like, oh, we've gone too far. They recognize they've gone too far, but they think that in their infinite wisdom that what they could prop up, they could also take down very, very slowly and not cause any services. And it's the same hubris in every single central banker or government official. They think that they can build it and they can take it down in a slow and controlled fashion, and it never is the case. And so then they always get to the situation where they have to take the chemotherapy, even though they don't want to take it.
Can you kind of compare and contrast the sizes of these two things? Because like I alluded to, listeners are going to be a little bit more familiar with 2008 and the size of that whole thing versus whatever is going on in China. We're totally uninformed about China. How big is this unraveling, would you say?
The interesting thing about China is that in the Chinese system, as opposed to the US system, most people buy an apartment. So like you get some money and you say, oh, I'm going to move in like 2 or 3 years time. So you buy an apartment off plan. You don't buy used, you buy new because the bank is going to lend against new. They're not going to lend against used. That's how it works in Asia. So you go get a loan from the bank, you put your down payment down for the property developer, and you put down, I think, 10 or 20% immediately. And then within a short period of time, you get your mortgage, and then you pay the full balance to the developer before you get the property. You wait years before you get your unit, but you fully paid for it. And so you're trusting that the developer is going to make good on that promise. So the developer is short a house or an apartment, long cash. And so what does any person who runs a scheme like this? They engage in Ponzi-nomics, where they say, okay, well, I'm going to promise to build more apartments than I have cash to build. But as long as I have a good new sales funnel, then I can get leverage from the bank on the cash I'm getting in from new marks, and I can build the houses that I promised to build in my prior years. And so that's the game that they ran. And so once the developers lost access to credit, then confidence from the buyers like, oh, fuck, well, is this person actually going to complete this house? And because they didn't have any new sales and no bank credit, they couldn't complete the old apartments. So there's something like, I don't know, however many millions of units promised to be delivered. And the question is, will these developers get enough government financing to do it? So it's a different problem. It's not exactly just straight money. They need apartments. So obviously the Chinese government doesn't want to get in the business of building apartments, because if you build it like shit, then they complain to you, not the developer. Right. So, they've been trying to pussyfoot around the situation of let's give some money here and there. Let's try to incentivize lending. But at the end of the day, it's the market's short millions of units of apartments. Who's going to build them? Right. It's a different flavor of a situation in China based on how the developers are funded.
Okay. So in the United States, we needed to make our banks solvent. So we kind of just injected liquidity straight into the banks. What you're saying is we need to still create like liquidity for these real estate manufacturers. So, but liquidity is being created either way. It's just like, where is it going is maybe kind of the big difference. But like, I do kind of want to hang on the point of just like trying to measure how big this is. At the end of the day, like if liquidity, it's all about injecting liquidity. How can we measure the size of these two things? Like, again, like just as a, how big the United States 2008 housing crisis was versus how potentially large this looming housing crisis is.
Like, off the top of my head, I can remember how many trillions of renminbi value of apartments are basically uncompleted. But it's probably in the $500 million to $1 trillion worth of just like uncompleted apartments that need to be built. Okay. Right. Okay. And so that's sort of that's the one problem. But obviously they snowball, right? Because if I'm a customer and I have my savings is in this apartment, I'm not going to get it. Well, then I'm not buying other stuff. Right. I'm not going out shopping, I'm not traveling. Right. My consumer confidence is low. So the money multiplier drops. And so I don't go to the bank and borrow money anymore. Not that the bank wants to lend it to me, because fuck, I just lost my apartment. I don't know. I busted my ass to save for this thing. And now the developer's gone bust and I'm not going to get it. So I'm not spending. So it's a multiplier effect on that, where you have these millions of people who they don't have the units that they were promised to get.
Okay, so massive liquidity injection then by the Chinese government. So like for people though that aren't connecting the dots here, Arthur, in terms of like, why is that good for crypto, right? It's like your base case is, more liquidity equals good for crypto. But somebody might be hearing this and say, but Arthur, isn't crypto illegal in China? Isn't it hard to get?
First of all.
Okay, so tell us about that. What is, for someone who thinks that, how does it actually work in China?
So Bitcoin is not banned in China. Certain financial institutions are banned from using it as a payment. The national currency of China is the renminbi. And so certain things you cannot pay with any other currency besides the renminbi. But individuals can own Bitcoin. They can trade Bitcoin. Certain institutions are allowed to hold it as well. What China did in 2007 and then finished up in a few years later is they basically said they went to all the major exchanges, the big three at the time, Huobi, OKCoin, and BTC China, and said, you will no longer have a Bitcoin renminbi trading product because we don't want to see it. We can't ban it. We know that's a fool's errand. People can still hold it, whatever. We know people are going to trade it P2P, but you are not allowed to have a public display of what this currency is worth in renminbi. And so that is what has been taken down. And so, yes, there's, the large Chinese exchanges all still operate in mainland China. The way they do it is they have these, I don't know if you guys used local Bitcoins back in the day, but it's like that. It's a messaging board. There's local traders who are able to wire money in and out of bank accounts, and you can buy and sell different cryptos. And that's how you get crypto in China. It is not banned.
So that's how the average retail kind of like mainland China participant would do this with like kind of like a local Bitcoin P2P type of experience.
Correct.
And like, how liquid is that market? How efficient is that market? It's obviously not as good as an exchange, but
size, like definitely millions of dollars. I mean, there's definitely a lot of size that goes through that. All the major exchanges, like, the Binances, the OKs, the Huobi's of the world, they all have their messaging boards in China and do decent kind of size business. I don't have any sort of numbers on that. It's not really published.
But if you want crypto in China, it's not hard to get, is what you're saying.
It's not hard. It's not like you go to Hong Kong. Obviously, in Hong Kong is China, but not China in the same respect.
Yeah.
But you go to the local currency dealer. It's Bitcoin. It's a renminbi, dollar, and USDT. Right? USDT is like massive in China. Right? People don't understand. Like they think fucking Jeremy Allaire is going to take some business out of Tether. Go fuck yourself. Tether is king in China. They love it, and it's liquid, and that is the flow. And the currency dealers will give you Tether versus renminbi versus US dollar versus.
Do they
Bitcoin.
Trust it more because it's not like Jeremy Allaire and sort of US Gov, US Gov sanction that's a little gray?
I think it's more of they're very comfortable with the Bitfinex founders. The Bitfinex founders have been involved in China since the beginning. I mean, they started in Hong Kong, then they were in Taiwan. And so I don't, Tether complies with all the same sanctions regime as Circle. So there's no difference there. I think it's just more, they know the executives, they've trusted the brand, it's been around for a long time. And so that's what's used. And the sort of the flywheel of the, a network effect.
Okay, so I mean, so if these markets are efficient, if you want crypto and you live in China, you can get crypto. So and the Chinese government, you said, like knows that they can't fully stop kind of like P2P trading, at least not without taking some super draconian type measures that they're not prepared to take. Okay, so that's basically why if you're money printing in China, if you're money printing, you're the Fed in the US, you're money printing in Europe, it all goes back to these store of value, non-sovereign, non-fiat store of value assets like cryptocurrencies, like Bitcoin, right? The same money printing, if it happens in the US or China, it's still flowing back to Bitcoin because this is where people want to hold their values. Is this correct?
Yeah. On the margin, people have a demand for Bitcoin. Obviously, there's bigger demand for gold and maybe foreign assets, right? So there will be capital flight out of China as they create all this currency, and the very rich and connected are able to get their exchange or yuan for dollars and get out of the system. It's all the same sort of flows, and Bitcoin is sort of in that sort of blob of stuff that people are going to buy.
Okay, let's shift towards the U.S. and the Fed, and what's their next move? So they pivoted somewhat in September. What's happening next?
So if you can afford it, I would highly recommend getting a subscription to Zoltan Pozar's new blog.
He's great.
So I saw him at a conference recently, and I went and got a subscription. And I was surfing last week, and in between surfing and yoga and massages, I started reading. I read all his stuff, and so he has some very interesting sort of notes about what quantitative tightening is doing to the markets and how the U.S. Treasury has been fighting it. And so there's been this back and forth battle between Yellen and Powell. Yellen's more powerful than Powell because the U.S. government's debt load is massive, and the U.S. government will get funded. Central bank independence be damned. And so what does that mean? That means that when Powell was doing QT, Yellen did, we're going to drain the reverse repo. We're going to switch the duration or the types of bonds that we issue. Instead of issuing long-dated bonds that nobody wants to buy, we're going to issue these treasury bills, like less than 1 year maturity, that everybody wants. And so if you've got, cash in the Fed that earns, let's say 1%, well, I'll give you 1.05% to buy my debt. So why don't you take your money out of the Fed and come buy my stuff? And so that's what happened. And so, $1 trillion of QT has been done since they started. Well, Yellen did $2.5 trillion of essentially QE. And that's why the markets are ripping. Now, the problem is once the reverse repo facility gets too low, then what happens? She runs out of juice. And so what does she do? She goes over to Powell. She says, stop that QT thing. And he tapered in May when, U.S. Treasury was about 4.5%. I think, and Zoltan gets into a little bit more detail. It's probably not really relevant for this podcast, but his theory is that around this level of overnight reverse repo balances, which is around 200 billion, it actually becomes destabilizing for the money markets that underpin the functioning of the U.S. Treasury market. And so Powell has to stop QT and very soon afterwards start quantitative easing. So my base case is, well, first of all, if Harris wins the election, and I think that the Democrats are incentivized to make sure that financial conditions continue to ease and there's no financial wobbles, which means that I think the Fed on Thursday either stops QT entirely or they plant some questions in the crowd where Powell can insinuate that QT is going to end in the near future. So you better get ready for it, kind of thing, and sort of soft sell that. If Trump wins, I think that they sit back on their hands and they let shit get fucked up because they don't like him.
Really? So right now, the Fed is like lowering rates, but still engaging in QT. And you think in a Harris world that kind of reverses and they.
Well, I think it's reversed either way,
QE.
right? Trump's going to put his own people in power when he gets there if he wins on January, whatever, right? But in the interim, these people hate him, right? Janet Yellen's been campaigning for Harris. There's been Fed governors going on the record saying, "I'm going to do what's in my power as a Fed governor to make sure that Donald Trump doesn't win." They don't say it like that, but they mention Donald Trump's name as in bad for American democracy. Sure. And therefore, I, as an unelected bureaucrat, am going to thwart the will of the people by fucking some shit up for him, right? So they said this. And so, while I do believe that, from a money markets and plumbing perspective, this has to happen, the timing could get a bit off if the preferred candidate of the government establishment doesn't win.
Yeah, but does this mark kind of a new era that we're in, where sort of fiscal policy and like Treasury is dominant, and Powell matters a lot less than he used to, or the Fed matters a lot less, or do they still like both matter? That which is the tail and which is the dog here?
Well, obviously Yellen has more power than Powell, right? She has, I don't know, was it $40 trillion worth of debt to finance?
The more debt you have, the more power you have in this system, basically.
Yeah. So if think of QE was 2008 to 2020, Powell had the power. And then they did stimulus checks. Treasury issued a bunch of money. And then Powell was forced to finance it, right? And inflation went nuts, right? Inflation is still high, right? It's still above his target. And yet he's cutting rates. He's tapering the runoff of his balance sheet because the Treasury's funding needs are so large that it's causing strains in the well-functioning of the financial markets, and thus Powell has to adjust to match the reality that Yellen is creating. It's not the other way around. And so Powell is or whoever will be in charge of the Fed next is, as I call, the beta cuck bitch towel boy of the Treasury Secretary.
New projects are coming online to the Mantle Layer 2 every single week. Why is this happening? Maybe it's because Mantle has been on the frontier of Layer 2 design architecture since it first started building Mantle DA, powered by technology from EigenDA. Maybe it's because users are coming onto the Mantle Layer 2 to capture some of the highest yields available in DeFi, and to automatically receive the points and tokens being accrued by the $3 billion Mantle treasury in the Mantle reward station. Maybe it's because the Mantle team is one of the most helpful teams to build with, giving you grants, liquidity support, and venture partners to help bootstrap your Mantle application. Maybe it's all of these reasons all put together. So if you're a dev and you want to build on one of the best foundations in crypto, or you're a user looking to claim some ownership on Mantle's DeFi apps, click the link in the show notes to getting started with Mantle. Centralized finance held all the power, but now DeFi gives it back to you. Enter the unlimited era with dYdX Unlimited, featuring instant market listings where you can list and trade any market instantly with liquidity. Experience trading like never before with all the trading tools you know and love all on chain. And then there's Mega Vault, your gateway to automatic liquidity and yield. Just deposit some USDC and start earning yield immediately. It's so simple, and dYdX Unlimited comes packed with so much more. Leverage, prediction market perpetual futures, instant deposits, and there's even a revamped trading rewards program to get rewarded for every time you make a trade. So go ahead and check out dYdX on Twitter at dYdX to get notified once dYdX Unlimited launches. Radically simple ideas always tend to catch on. That's why CARTESI did the hard work of putting Linux on chain, so that building dApps can be radically simple by using Python or JavaScript and their suite of libraries. Simple, like not rebuilding the basics from scratch. Simple, like dedicated scalable compute for your dApp. Simple, like building dApps however you want. Web3 should be simple too, like bread and butter. CARTESI brings radically simple solutions to Ethereum, so developers can do what they do best: build. Go ahead and discover a flexible modular stack on CARTESI and build your most powerful, ambitious project yet. Visit cartesi.io/simple and simplify your blockchain journey and start building today.
It's like a pretty classic Bitcoiner take that as time goes on, the money printer always just becomes more corrupted. It's just like the politicization of the money printer is just inevitable. And I think like back when we created the gold standard, the dollar on the gold standard, that was the most like credibly neutral version time era of the dollar that we ever had. And ever as time has gone on, it's just like there's been just more and more influences, political influences that are creeping closer and closer to the money printer. And now with like kind of the like formalized flipping of power over the money printer between the Fed and the treasury, it kind of seems like we're in the final stages of like, well, eventually we're just gonna like rip the mask off and just like not even pretend that this is political or credibly neutral, and just start issuing money in the direction that political parties want it to go. Is that kind of how that's the trend that I see? Is that how you see it?
Cyclical, right? And the Fed and the Treasury were the same organization from 1945 to 1951 in the United States, right? In China, there is no such, like the PBOC is just another arm of the state, right? And so they do what she tells them. And so, I think that America will become American capitalism with Chinese characteristics. America needs industrial policy to build the stuff that they outsource to China. And so they're going to have to do the same thing that the Chinese did to build up their manufacturing situation. Financially repress the people at home, allocate credit to the industries that they believe are relevant for fighting a war, right? The chips, the factories. There's going to be some new shipbuilder bill to reshore shipbuilding in the United States, right? All these sorts of things. These are extremely expensive, especially when you have a population that all have liberal arts degrees and no one can, use a screwdriver. So it's just expensive.
Well,
but it's been done before and it'll be done again. That's a cycle.
All right. Speaking of liberal arts degrees, like maybe that brings us to jobs a little bit. It's like, do you care at all about recession in the U.S.? Does this impact kind of like your models? Are you looking at like jobs reports and this sort of thing?
How do you have a recession when the government is like 30% of GDP? It's almost mathematically impossible, which it is right now.
Is that why we haven't had a recession?
Correct.
Because everyone's been talking about the looming recession. The recession's coming. The recession's coming.
Yeah, I've I have some very expensive subscriptions to people who I respect. But I'm like, look, like, in economics, right? GDP, government transfers are a big portion of that. If the government is like 30 to 40% of all economic activity, and they're incentivized to increase nominal GDP to tax it, why would they ever let it go down? This doesn't make any sense. And so there will never be a recession.
We're never getting a recession.
No.
We're just gonna juice.
As long as the government was willing to run a fiscal deficit, there will not be a recession.
Why would there ever be a situation where the government's not willing to run a fiscal deficit?
Well, the voting preferences change, hyperinflation, war aftermath. Maybe they've finally deleveraged their balance sheet. There's situations, but we're not in that situation right now. This is this is wartime for U.S., Russia, China, Europe, right? They're all at war with each other, and so it's time to spend money to build stuff.
Does Europe matter at all in this equation? We talked about China and the U.S. Does Europe matter?
Unfortunately, no. I feel bad for the Europeans, but they just elect some idiots who just keep taking dicks from the U.S. all day.
So it's like limited sovereignty you see in kind of like Europe over its economic destiny.
Look at Germany, right? They foolishly said, I don't want any more cheap Russian gas. And now one of the largest sort of ammonia producers, BASF, is shutting production. all the car manufacturers can't produce cars at the same price level as the Chinese, and they're getting their asses kicked. Economy's slowing, price of energy is down. And so what are they doing? They're importing expensive LNG from the US. And, you can pick a European country and leaders are doing dumb shit because of their allegiance to, America.
Okay, so we got China, money printer. We've got US
And they're going to
money
have to print
printer.
money. They're going to print money to,
We're all
increase-
printing money here. Okay,
everyone's
so
printing money.
let's talk about your crypto portfolio right now, or just like in general, how you're positioned for this. Maybe we'll start with like cash versus crypto or something like that. So like, how allocated are you into crypto right now?
In my crypto bucket, I'm losing 95% invested, right? I have a bit of cash, but yeah, obviously we run a fund. It's all my money anyways, but we have Bitcoin, ETH, and then we have a lot of locked tokens in a lot of projects.
Mm-hmm. Well, how big is your crypto bucket portfolio percentage versus non-crypto?
Liquid crypto bucket, I don't know, versus non-crypto is probably like 5-6x of the other bucket.
5 to 6 times larger than the non-crypto bucket. Okay, nice.
All right, one of us. You're one of us. All right, cool. Got that established. All right, let's talk about Bitcoin and Ether then. So you specifically mentioned Ether. I want to talk about that for a minute because it feels a little bit like Ether, the asset, has been left behind this cycle. Right? It's like, what's happening to ETH, man? Like, do you have a take on this?
So I still haven't gotten all the numbers together, but essentially, if you take a look at, so let's say post FTX blow up, right? Solana went down to what, $7, and now it's at 170 or 760, something like that, right? Like amazing performance. And ETH went from what, like, I don't know, 1,200 to 2,500, kind of like double-ish, right? And so like, why has Solana done so well? Well, on a sort of percentage change basis, the profitability, if you own Sol and stake it and become a validator, has dramatically improved over the past sort of 18 to 24 months. And it correlates perfectly with the rise in the price, right? Revenue is up because transactions are higher. You have you have MEV, you have the sort of the priority fees and all these sort of things, and and the validated rewards from being a validator, right? So the profitability of the chain has improved dramatically, and therefore the price has done very well. Now, ETH already came into this thing as the top dog, right, in terms of like size of the network, and so on a rate of change basis, obviously didn't go down as much either, right? Solana went from 250 to 7. ETH went from, I don't know what, like 3,000 to 1,200. 50% decline.
4,500, something like that.
And so, but everyone in ETH thinks, oh, it should be up 10,000. Well, show me $10,000 worth of improvement in the underlying metrics of the percentage of circulating supply that has been burnt because there's been transactions on the network. And so that hasn't happened, and therefore the price hasn't gone anywhere. But law of large numbers tells me that as Solana gets larger, it's harder and harder to replicate those past returns. And so a lot of the tourists who are in Solana, because it's done so well from 7 to 170 or 160, because things have improved off of a very low base, right? The network had just started almost when FTX blew up. Well, you're not going to replicate that again. So it's going to be hard going forward to replicate the past success. And I think once that narrative shifts and they get a bit of sour grapes, then you start seeing more sort of like activity back in ETH. They're like, oh, well, guess what? ETH, L1 plus some of L2 transaction volume is higher than Solana. The transaction fees are coming down. It's more secure because in a proof of stake situation, it's got a higher total notional value of the network. Therefore, it's more secure. And if we believe that there's like, dangerous state actors or corporations that want to take down competing sort of free association of people using compute, then wouldn't you want the strongest chain, which is the one that has the most value, to be slashed? So I think all these things start to matter when the velocity of change slows down in Solana, because it's past success breeds future failure.
Okay, but so that's cool. That's interesting. I do think that's how the market is viewing ETH right now relative to Solana. They're looking at kind of cash flows, and Solana is like throwing off a lot of cash. It's almost looking like a capital asset. I will ask though, this is different than the way people value Bitcoin, right? Bitcoin doesn't have any, it doesn't have any cash, doesn't have any burn. It's just viewed as like this monetary asset. And so a lot of people that are ETH bag holders, maybe ETH holders, are like, Arthur, dude, different rules apply. Why not? ETH is money, man. ETH could have a monetary premium, this magic thing that just like makes it go up the way Bitcoin like has that. Bitcoin doesn't have to justify itself to like Larry Fink with the, you know, the size of its cash flows. So why can't Ether be money? Why can't Ether be like Bitcoin?
Because they decided in 2016 to preserve usability over moneyness. When
the DAO,
Yeah.
that one time.
Well,
Not gonna let him off for
it
that.
takes one time. It only takes one time. Once you do it once, you're fucked. Yeah, don't worry. It's not money. The community clearly spoke. We want usability. We believe the decentralized computer is better served if we sort of rewrite history and go forward. You cannot be money anymore. You're not money. You are.
Hang on, I want to debate that, because there's been other times post DAO when the Ethereum community did not make that same choice, especially with the parity hack, and parity tried to recover its.
How large is parity hack percentage based on the total value of the network at the time? Was it the same percentage?
No, it wasn't close to the percentage of the network as the DAO was. But the
That
DAO
was
was like existential, and so that I kind of actually think that alludes to my point. Like, because the DAO was existential, like it was kind of like, well, Ethereum kind of fails if the DAO is allowed to proceed without.
Does it really? I don't know. We don't know that. That's a counterfactual argument. We only know what happened. Well, then, it was essential. You were presented a choice: be money, be a computer. We chose as the Ethereum community to be a computer. So guess what? You're a fucking computer, and
Bitcoin rolled back the blockchain just like Ethereum did in 2010. Like, there was an inflation bug in Bitcoin, and they rolled back the blockchain.
That was a long time ago.
No one remembers that, but like it still happened. I think like some of these things are like lost to history. People are coming into Ethereum these days and don't know about the DAO and don't care about the DAO, and the properties of Ethereum are the same nonetheless.
Well, but the problem is that ETH is apart from the history, ETH is useful, right? It's spent to do work. When you spend them to do work, you can't be money. Why is oil not money? Because I need to spend it. It's got another.
Oil is money. We got the petrodollar.
Well, the dollar is the worthless currency. The petro is the asset. ETH is an asset. It's not a currency.
You know what's funny about this, Arthur, is we actually had Peter Schiff on the podcast, and he was like, hey, the reason that Bitcoin is not as good at money as gold is because gold has some like utility. Like, you know, like he held up a phone. He was like, how much gold is in this phone? And he was basically like, look, there's some percentage of consumption of gold and it has some utility value, and that actually makes it a better money. I don't know about like the case that just because Bitcoin has no other kind of like use, it's not used as a consumable, transformable kind of commodity, that makes it a better money, because like gold has always been used in industry. But actually, I want to
that's a percentage of what gold's use case is. I think gold's use in industry is much lower than ETH. Literally, we're talking about cash flows. You have to spend ETH. The value of ETH as a decentralized computer is predicated on you spending ETH to use the computer. The value of gold as a monetary asset is not predicated on industry using gold.
Let me ask another question, because like we're actually, you know, we could get into like debating this because we're kind of ETH is money bulls, as you know, Arthur. But like, let me just ask a more general question of like, what would change your mind on this? Because I know you're a trader. I know you're super practical. I know you'd like, you know, you would change your mind on particular assets and the way they're framed if evidence came forward to kind of like persuade you otherwise. What would persuade you otherwise that ETH actually could have some monetary premium?
I don't think that. I think it's so fundamental to what ETH is that unless you're saying that there is no longer any endogenous yield in ETH, the fee is no longer paid in ETH to use the decentralized computer that's hosted on it, I don't think it can ever be money in the way I think about money.
Interesting. So you think because it has utility?
If ETH went to $100 million per ETH, that's actually a problem, because if it's too expensive to use ETH as the commodity that runs the computer, then nobody uses the computer. And so there is a price at which ETH is too expensive, and then it becomes not useful anymore. If the price of oil went to $1 billion per barrel, then the economy collapses and nobody uses oil anymore because it's too expensive.
I got it. I still feel like people get wrapped up around this idea of like they're not separating like Ether is a separate asset from Ethereum block space. Like Ethereum block space is really the oil in this case, right? And Ether is more the petrodollar. It's the monetary unit used to purchase the oil. It's not the oil itself. It's not the actual commodity. So like Ethereum block space could run out. And you know, it's a different asset than Ether as the monetary unit. But I guess
I can't, but I don't have a representation of both as a currency. I can't separate them in terms of an asset. So yeah, that absolutely makes sense. But okay, then give me the Ethereum block space money or asset or token, right? That's going to allow me to sort of bifurcate these things and then have the usable thing and the non-usable thing, right? I don't have, I just have ETH. And so it's both.
It's
But
interesting. There have been projects to really like create kind of like a gas token on ETH or a block space token. That might be interesting in the future. But still, you are bullish ETH from a pure cash flow perspective. It sounds like if you're holding it in your portfolio, so it's
also it's more
upside on that.
Is the most developers. And if we think about the most innovative new things in DeFi or infrastructure, they all start on ETH. Solana, there's copied on Solana, maybe it runs faster or whatever, but they start on ETH. And so I still think ETH is sort of the daddy chain. It sponsors all the ideas. It has some of the smartest people developing new things to take this industry forward. And therefore, I think it's on a long-term basis, a better asset to hold. I love trading Solana. It's great. It's liquid. It moves fast. It's got a very good community. Do I want to hold, a large portion of my portfolio in Solana? Fuck no.
Okay, so Arthur, if ETH isn't money, then that implies that some external money needs to be imported into the Ethereum ecosystem, because Ether is the only, native asset inside of the Ethereum ecosystem. Everything else is like created downstream of it or is imported from elsewhere. And we have a large amount of like stablecoin imports into the Ethereum economy. We have some amount of Bitcoin imported into the Ethereum economy. So if ETH isn't the money of Ethereum, what do you think will become the money of Ethereum?
Crypto. ETH might be the money of Ethereum, but I'm talking about, if I'm thinking of my portfolio, what's my monetary reserve asset? It's Bitcoin. Yeah, sure, ETH can operate as money within its own ecosystem, but I'm not really trying to like silo myself on.
We got him. ETH is money, at least in Ethereum. We got him, David.
If the Ethereum ecosystem grows to become the like dominant backbone of the internet economy, and we have all these layer twos, they're in all these different corners of these websites, bajillion different chains, app specific chains, and they're all kind of hooked into the Ethereum base layer. In that world, if Ethereum does become like the backbone of the internet in terms of like, the internet value, in that world, is ETH money?
It could be. I think let's see if ETH can do that. And then let's see what actually is happening on chain.
So overall, though, this cycle, the bears are saying ETH is dead. This cycle is going to skip ETH entirely. And like we already discussed your concept of the cycle, which is like, why do we need 4 years? We don't need 4-year cycles. It just is what it is. But do you think ETH has a bid at some point in the next couple of years? It's not like dead. We haven't already seen all-time highs. Like, you're still a believer here.
Yeah, of course I'm a believer. I think ETH is going to do very, very well in this cycle. And again, I think the enthusiasm for Solana will decline as it gets so large that the percentage changes needed to equal the past returns are just not going to happen. It's just hard. Law of large numbers.
What else do you like in crypto? Should we talk meme coins? Should we talk DeFi tokens? I mean, you take us. What are you looking at?
My favorite sort of thing that's in our portfolio and probably our largest position, thankfully, is Ethena. So I think that they are going to do very, very well as yields in fiat are compressed relative to the growth in nominal terms across the world. And if crypto is ripping, the basis that Ethena is capturing is going to blow out. And so you're going to get back to the 50, 60, 70% annualized yields in Ethena, and that's going to bring in the TVL, and obviously, and the token price will go up. Also, I think that the Ethena team is doing very, very good work in just systematically knocking down exchange after exchange, use case after use case, and saying, okay, we want USDE as collateral so that people can use it. And we want it to underpin all these different economies. I know that they're working on some of the largest exchanges adding USDE as margin currencies for all of trading, which again is just going to increase that flywheel and get them on the same sort of pedestal as USDT and USDC. And then it becomes a question of like, what types of risks do you want to take? Do you want to take US dollar banking risks? Do you want to take centralized and maybe decentralized exchange custody risk? Choose.
Arthur, I know you're a fan of meme coin speculation. I'm wondering, what does it take? How do you evaluate a meme coin? What does it take for a meme coin to get onto your portfolio? Are you kind of just like ape first and investigate later, or like do you actually have like a process for evaluating a meme coin?
No, it's like I got to hear about it, right? So number one, I don't spend much time looking at screens, so
Uh-huh.
I'm doing other shit. And so if I hear about something, obviously I'm late relative to
Right.
everybody else. but I'm
Everyone's
early.
always late to their meme coin. No one's
But
early to the meme coin.
That's the point, because if you, I don't know, I don't have the exact number, but there was some pumped up fun statistics in terms of like the longevity of a meme coin at particular nominal values
Right.
of market cap, and the percentage of the total supply of all coins issued that made it to that level. So to get over like a $500 million market cap is like, there might be less than 50 of these things.
Right. Yeah, it's like one in 100,000 or something.
Yeah. And so, but obviously if we're talking about meme coins as an attention asset class, you need to be sufficiently large before you get the most amount of inflow into your project. So if I'm not sitting at my computer all day and I don't have time to try to find the next, $10 million to $500 million market cap meme coin, then once something crosses 100 million to 200 million market cap, and I somehow hear about it, whether it's on Twitter or somebody mentions it on a podcast or somebody's chatting about it in a chat that I follow, then I'll ape, because okay, it's proven that it has enough virality to make it across these very hard hurdles, and therefore it's more likely to get Matt Levine and Money Stuff on Bloomberg talking about how dumb it is that these crypto idiots are buying this. Right? When I see that, I want to own that, because he's talking about it, he heard about it, so that means all these other Muppets are going to buy it too now.
Right. Right.
Okay, so have you been? What's Matt talking about now? Is he talking about like
He wrote something about goat.
goat?
Yeah.
What do you think about this whole like AI meets crypto kind of thing? Right, it's like it's starting sort of in the meme coin world, but there are other like crypto projects. Like I think you've written posts about this. I mean, have you pivoted to AI in terms of your portfolio holdings? Are you like
we have
Nvidia's stock and that kind of thing, or do you think crypto is a good way to get exposure to AI? And what do you think the intersection is here?
Well, I think obviously I've written about this. I think AI agents will use Bitcoin intrinsically because it's something that they can understand from a particular like code basis. Fiat currencies and human legal systems is not intrinsic to their world. So
But
that's
they
just
can't have
one
much
thing.
agency on Bitcoin. They can't do much on Bitcoin.
Why couldn't they do much of it? They can, couldn't they spin up their own, data center, build, if you have self-replicating robots, they could build their own ASIC miners. Like, why not?
Oh, that's a future I'm not prepared to think about. I feel like that's
It
pretty
get a little
far off.
physical, a little
Yeah.
too physical.
Uh-huh.
Yeah, obviously it's a longer tail thing, but I think it's if I'm an AI, why would I use some fiat currency that lasts 100 years and dies every time a bunch of humans get together and decide to debase it because they want to get reelected? All right, that's the history of all fiat currencies over the last 10,000 years. So knowing that they've literally been trained on everything that we've ever done and written, and they know our history, why would you buy a dollar or a euro or a yen? It will not exist in 100 years. Just, we know this. But Bitcoin theoretically could.
Well, I agree with that. Understanding like human history, like humans always like inflate their own currencies. They always like make their own currencies and they just make it up, and then therefore that like lends itself to the value of Bitcoin. But then also you could kind of argue the opposite side of things. Well, like if humans always just end up making currencies, won't the AIs also end up making their own currencies?
Maybe they will. We don't know. It'll be interesting. And maybe this
Isn't that what goat is?
It's like goat coin.
It's almost what goat is.
They're gonna start as shitcoiners and they'll move up the stack.
As we all do. Come on, let's be honest, right? As we all do. But like, I mean, the really neat thing in watching these experiments, like Goat or also like Luna, this kind of thing, is watching them interact on chain. Like a revelation that David and I have had recently is, and this has been we talked about for a while, that the biggest group of unbanked in the world is going to be like basically AI agents. An AI agent can't roll up and get a bank account, get AML KYC'd. So they're going to do all of this entirely on chain. And if that's not bullish for selling block space, this block space commodity, I don't know what is, having the AI agents as consumers of all of this. Are you following that train of thought? Do you think that's bullish for
absolutely. I mean,
for our banks here?
Caution that I think that AI agents will be able to fool all AML and KYC forms. So they're all digitized anyways, right? They can fake an image, they can deep fake shit. They'll have bank accounts for sure. But again, I think intrinsically to like commerce that's frictionless, that's cheap enough for them, crypto makes the most sense. Now, whether they create their own cryptocurrency, I don't fucking know. But I think this is an interesting way to start. And that's why I think there's a lot of hype around these AI meme coins, because it's completely new, life force that is entering our space.
Okay, so we talked about the money printer, how that's just like going to happen. We've talked about how you're positioned with respect to crypto, but like over the last, 2 years, every so often, at least once a quarter, there's some kind of like war scare that happens, right? I can't even think of the most recent, but obviously we've got, the entire world is kind of a powder keg. You've got Israel and Iran, everything that's going on in the Middle East. You got Russia, Ukraine, you got China and the US, whatever power dynamics are there. And so like the thing that keeps interrupting this, secular bull feeling is like suddenly could there be the outbreak of war? How do you position yourself for news events like that? Some country is chucking missiles suddenly at another country, like, war. I think you had this quote, but like war in general is uninvestable, right? You want to be out of these high risk assets, don't you, in those types of conditions? So how do you like trade the ups and downs of this type of thing, or do you just largely ignore it?
I mean, I think my fundamental thesis is that war is inflationary. And if you look at the price of gold after the oil shock from 1973 to 1980, gold did very, very well. Stocks did very, very poorly, right? So if we believe that Bitcoin and gold are in the same sort of situation where they're stores of energy, and energy goes up in war, because what is war? Is we spend energy to destroy things, which is completely retarded, but it wastes energy. And so the energy that's stored is obviously more valuable. So over time, Bitcoin will keep pace with the price of energy in a wartime scenario. The problem is it's extremely volatile. And so if you are worried about war, then you should be using little to no leverage, and you should size your positions accordingly, meaning that like when you go to bed at night, you can keep your phone on silent and do not disturb, because you don't care what happens overnight. Bitcoin could be down 75% when I wake up tomorrow. Am I going to sell any? Fuck no, right? Because I understand, okay, well, there's a short-term dislocation. You sell what you can, not what you want. And if Bitcoin's extremely liquid, maybe it's a Saturday night and somebody threw some missiles around. The only thing that people could trade is Bitcoin. They dump that so that their risk is, the right way around on Monday morning when all the other markets reopen. Cool. I'm ready to rock and roll and handle that sort of volatility, because I'm not going to get liquidated. But I know that over time, 5-10 years from now, or whatever it is, Bitcoin will keep pace with the price of energy, and energy will go up because we're destroying it through war.
So that's how it feels like it should trade, right? It should trade similar to gold. It doesn't always, though. So when these events happen,
volatility, it's extremely volatile. There's a great chart of gold versus the German mark during the Weimar Republic, and it's like a fucking yo-yo. But obviously the general is trend as a logarithm, an exponential increase in value, and then as the mark was devalued. But if you use leverage, you'd have gone bankrupt multiple times throughout that cycle. And that's the same thing.
You hear about that fund that got bankrupt shorting Luna while it was crashing? Because they took like 100x leverage and they shorted Luna. It would have been a great trade, except they just got bankrupt. They bankrupted themselves like 3 seconds. Yeah, Luna's a great thing.
The price of Luna was really volatile, but it was going to zero. Mathematically, we all knew that once you knew what a death spiral was and the math behind how these algorithmic stablecoins work. But did that mean that it didn't go from like 10 to 20 in like a few ticks because, maybe they're gonna fix it kind of thing, right? So it's a similar sort of situation. Just don't use a lot of leverage. If you're really worried about war, use, size appropriately, no leverage, and over time you'll be fine.
You said this, that I like this line. The worst thing I could do as a trader is trade based on who I think is right on the right side of this war. That will lead you to ruin, as war will be met on either side with financial repression, outright asset confiscation, and destruction. The best thing to do is get yourself and your family out of harm's way, and then shepherd your capital into a vehicle that outperforms fiat debasement and maintains its energy purchasing power. That's like a common theme, like for you, is like fiat debasement and being able to preserve and maintain your energy purchasing power. Is that still how you kind of denominate things? Like at the end of the day, for Arthur Hayes, I mean, I remember one time you came on the podcast and you told us like if you could, you'd like denominate and like you'd have like you strap oil barrels to your back and like haul them around as like the way to denominate, because that's just like pure energy. Is that still how you're kind of denominating these days, and like the cost of energy?
Yeah, I mean, Well, first of all, I always divide any sort of fiat asset by the respective central bank balance sheet and see if it outperformed. Tech stocks did well over, versus the Fed balance sheet from 2008. S&P got smoked. Real estate got smoked, right? So these things are not performing as the currency is debasing. Gold obviously did well. Bitcoin did and gold didn't do that well. Bitcoin did fucking amazing, right? Obviously from 2008 to the present. And so that's my guiding light of a chart. It's like, here's what happens. I have empirical evidence of what happens when a central bank decides to debase the currency. And we weren't even in wartime, at least in the United States' perspective. And so why would I own general stock indices, right? It's just dumb. I can see in the chart. Doesn't make any sense. I can debase things by the price of oil, and I can see that from 1973 to 1980, a unit of the S&P 500 bought 80% less oil by the end of the decade than it did at the beginning. And so stocks in general are bad inflation hedges. There are particular stocks that do well. You have to be a stock picker, but like the general stock index investing leads to ruin. But gold did well. Gold pretty much was even with the price of oil over after Yom Kippur War and the Iranian Revolution. So obviously there's no such thing as a crystal ball, but the historical precedents that I've looked at, assets like gold and Bitcoin will do well as fiat's debased and energy goes up in price.
You still like gold then? You still like gold, Arthur? Or
absolutely. I'm a vault full of it. I like gold because gold is what the central banks are going to buy. Central banks are buying gold to de-dollarize, to save against war. There's some interesting theories about how Trump or Harris could essentially revalue the gold in the Fed's balance sheet to instantly devalue the dollar, but give the Treasury billions of dollars to spend to do, industrial policy or handouts or what have you, right? Because the Fed's the only central bank in the world where I think the carrying cost of gold in the Fed's balance sheet's at $42 an ounce. So if they just put it at the current market price, that's something like $500 or $600 billion of funny money they can hand to the Treasury, which then gets to spend into the economy without increasing the debt load. So there's shit like that. So gold is what the system will buy to reflate itself. The gold price needs to go up 14 times for the general central bank balance sheets to match how much gold relative to the amount of currency was issued that we had in the 1980s. So I love gold.
Okay, you love gold because central bankers love gold, but do you think that changes? Like maybe the current crop of institutional gray-haired central bankers need to go for that to happen, but like the new generation, does a cryptocurrency, does Bitcoin become kind of the new gold that central bankers hoard? I'm not talking about like the next 10 years. I'm talking about millennials are the new central bankers or something like this. So 30, 40 years in the future.
I mean, maybe, but I think the trade right now is gold goes up 10 to 20x in the next 5 to 10 years, based on just historical precedents and who's in charge right now. Could that change? Sure, of course it could change, and my view would change, and I'd adjust my portfolio accordingly.
Arthur, since 2022, we've had a major conflict in Russia, in Ukraine. We've had the largest conflict in the Middle East that we've had in a very long time. Things over in Taiwan, we haven't had Taiwan in the news for a while, but still nonetheless, things have kind of escalated over there in that region. Is this a trend that we should pay attention to, or was the last 2 years kind of just are we done with all of that? Where do you think violence is going on the geopolitical scale?
I mean, I think there'll be conflicts in a lot of other places, right? There's China versus the Philippines. There's, Venezuela versus Guyana with their oil fields. There's what's going on in the, former French colonies in Northern and Western Africa. And all these are just flashpoints between the United States and NATO, and then Russia, China, Iran, right? And so there are all these different flashpoints. And the theory goes is the reason why, nuclear powers like Russia, China, and the US fight proxy wars is because no one wants to engage directly with each other because they're afraid of thermonuclear retaliation in war. Right? Let's hope that theory holds, because of course it's very sad that all these people are dying in all these different places. But if we exterminate the entire human race because a bunch of old fuckers decide to throw missiles at each other, that'd be even worse.
Yeah, that would be very bad for the price of crypto.
we wouldn't
put
be
it
around. It
mildly.
wouldn't matter.
It wouldn't matter anymore.
Yeah, and it's uninvestable. I'm not here.
Well, it totally is. Thermonuclear war is completely uninvestable. All right, let's end with this. Then, Arthur, over the years, you've given a lot of advice, like good advice, I think, like to crypto investors and traders. What's your best advice for them at this point in the cycle? Like, what should they be thinking of? What should they be doing?
Read a book about World War II and
World War II.
what happened in World War II, World War I. What was life like for the average man, woman, and child during these wartime periods, and see how shitty it was. And then the next time some dumbass politician is trying to get you to wave a flag and go send your son or daughter off to war, I say fuck you to them, because this is fucking retarded. And so I think that would solve a lot of problems. People don't read any books. They don't understand history. No one was around then, so they think that this is a glorious thing to go and throw missiles at each other around the world. I'd say that's an advice. And you'll also see what happened in the finance, because all the things that we're about to do in every major country have been done before in wartime. And so the playbook is there. Of course, there wasn't Bitcoin back in the day. There was gold and other ways of sort of trying to protect your wealth, but similar sort of principles applied, and similar sort of ways when people made a lot of money and people lost fortunes as well.
Yeah, big plus one on that, and reading history. I mean, if you have it kind of sucks for us too. It's like the old generation that was around, like the World War II vets and people who lived through kind of like the 1920s, 1930s. It's just like they're disappearing. So you can't have a conversation with your ancestors. So like a way to do that is to go read a book. Arthur Hayes, thanks a lot, man.
Thank you, guys.
Great to have you back on. We'll talk to you soon.
Cheers.
Gotta let you know, Bankless Nation, of course, none of this has been financial advice. Crypto's risky. You could lose what you put in, but we are headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.
Bankless Nation, we're doing something we've never done before today. We're offering an all-access pass to all the best parts of our podcast at a price that's kind of a no-brainer for the value that you get. This is a price that includes basically everything. It's the private debrief episodes that Ryan and I record after our guest interviews, where we say things that we wouldn't have necessarily said on the interview itself. It's also the early access to all of our episodes, so you can get the early scoop and stay ahead of the trends. And it's also the private bonus episodes that we keep exclusive to our paid subscribers. Content directly from the best builders that will give you an edge. So you can scan the QR code for wherever it is on the screen, or you can enter the code podcast at checkout for that exclusive discount. That's podcast in all caps. And then from there, you can click the premium feed and add your unique link to your favorite podcast player. And if you're in Spotify, we always ship the ad-free video of every episode as well, so you can watch or listen inside of your shiny new premium feed anywhere, anytime. So what are you waiting for? Get your all-access pass to the Bankless podcast today.